Famed investor Jim Rogers holds a contrarian view, staunchly doubting the Federal Reserve's narrative. Advocating for smart wealth preservation, Rogers suggests the unlikely solution of investing in undervalued assets. Uncover the compelling logic behind his disruptive strategy and why it might be your financial lifeline in uncertain times. In an era dominated by central bank interventions and market manipulation, skepticism is a valuable trait for investors seeking to protect and grow their wealth. Jim Rogers, a seasoned financial guru with an exceptional track record, argues that blindly trusting the Federal Reserve's actions may lead to perilous consequences.
The Fed doing the right thing?
No. Oh, Henry, you're bad for my nervous system. I'm going to have a seizure right here on Business Insider. They have no clue what they're doing. They've driven interest rates to the lowest in recorded history, and every other central bank in the world has followed them. Interest rates are negative in many parts of the world, as you know. This has never happened in recorded history, and it hasn't worked. And it's going to end very, very, very badly.
Instead, he encourages individuals to question the status quo and embrace a counterintuitive strategy, investing in cheap assets. Rogers' contrarian viewpoint stems from his belief that rising interest rates, a result of inflation, and incessant money printing have inflated asset prices to unsustainable levels. The pervasive influence of central banks has distorted market dynamics, making traditional investments increasingly risky. To counter this, he advocates for a shrewd approach that involves identifying undervalued assets overlooked by the masses. While the Federal Reserve insists on downplaying inflation concerns and promotes an environment of seemingly boundless liquidity, Rogers argues that this rosy narrative may be masking the true risks lying beneath the surface. By blindly accepting these assurances, investors may inadvertently expose themselves to significant wealth erosion when the tide eventually turns. Looking at Rogers' dire warning, it's hard not to feel like a tightrope walker without a safety net. But there's a silver lining to this financial storm cloud. Rogers, the economic Paul Revere, is not just heralding disaster. He's also giving advice on where to seek shelter. His solution? Invest in cheap assets. It's like the old adage, buy low, sell high, but on a global economic scale. This is an odd bit of thrift store advice for the investment world. Rogers' message is a siren call for prudence, a plea for us to scrutinize our investment portfolios. It's a game of musical chairs, and when the music stops, you'd better hope you're sitting on an asset that's not about to disappear.
Have an asset that's already down 60%. Sugar is down 60%. These are not bubble prices. They can get cheaper. But commodities are the only assets I know that are still somewhat cheap on a historic basis. So people must do what they know and what they figure out. But I would say that commodities are the cheapest asset around right now. And I do own commodities, especially agriculture.
With Rogers' clarion call ringing in our ears, it's clear that the time for watchfulness is upon us. It's time to dust off that magnifying glass and play Sherlock with our finances. After all, when the investment winds are blowing a gale, it's the sailors who know their ship best that weather the storm. To paraphrase the immortal words of Benjamin Franklin, an investment in cheap assets pays the best interest. Of course, he didn't exactly say that, but I think he'd agree with the sentiment, don't you? Rogers' philosophy prescription for financial well-being is pretty straightforward. He likes to buy assets on the cheap, a bit like snapping up all the bargains at a Black Friday sale. And in his view, the biggest bargains right now are commodities. Picture him gleefully wheeling a shopping cart through the investment aisles, filling it with undervalued treasures while other investors look on in bemusement. Rogers has been on a veritable interview spree recently, a financial Johnny Appleseed sowing seeds of wisdom. And his core advice? Don't just invest, invest smartly. This is where his enthusiasm for commodities and agriculture shines through. He's particularly bullish on these so-called cheap assets. According to Rogers, commodities are the investment world's equivalent of a misunderstood artist, hated by many but with so much potential. Imagine buying a diamond ring for the price of a candy bar. Talk about a steal. Rogers' insights are as intriguing as they are informative on the agricultural front. In our rapidly changing world, self-reliance is increasingly taking center stage. Investing in agriculture could be like buying Apple stocks in the 80s. You're planting the seeds today for a potentially abundant future harvest.
Well, agriculture has been a disaster for a long time. So normally what I do, Jay, is I try to find what's the cheapest asset. If I were looking at agriculture, say, I would get out 20 agricultural products and see which is down the most, which is down the cheapest.
Diving deeper into his treasure chest of investment tips, Rogers shares that he has a soft spot for hard assets like silver. It's like the Cinderella of commodities, overlooked and undervalued, down a whopping 70% from its all-time high. The same goes for sugar, another underdog in the commodities market. Despite their potential, Rogers notes with a hint of incredulity in his voice, people haven't been queuing up to buy these assets in recent years. It's crucial to note the subtlety in Rogers' message. Despite the storm clouds on the horizon, he's not advising us to batten down the hatches and hide all our money under the mattress. No. Instead, he's advocating for strategic maneuverings, like a skilled chess player placing his pawns carefully to control the board. Investing in the game, and commodities, agriculture, and silver are his pieces of choice. Now, you might be thinking, commodities, agriculture, silver, but what about my tech stocks and real estate investments? To that, Jim Rogers, in his charmingly frank manner, might respond with a patient smile. Sure, go ahead, but remember the words bubble and burst are often found together in the financial dictionary. The thing about Rogers is that he looks at a half-empty glass and says, well, aren't we lucky to have a glass? In other words, even in a world he sees teetering on the brink of financial calamity, he's finding opportunities. As he'd put it, there's always a silver lining, or more accurately, a commodity and agriculture lining. This is a man who values the forgotten, the underestimated, and the unsexy investments that many overlook. While most people are running toward flashy tech stocks and Bitcoin, he's rummaging through the financial market's bargain bin, seeking hidden gems. He sees a future where these overlooked assets could become the lifeboats that keep us afloat when the financial sea gets stormy. And here's the key. Rogers isn't predicting doom and gloom for the sake of theatrics. It's not a case of look out, the sky is falling.
If you're very smart and you know a company that's going to discover lots of copper or wheat in Berlin, buy all you can and then call me because I want to buy it too. So I don't really look at the country so much as I look at the products. And these days you can buy ETFs, and many studies show that buying indexes is better than trying to buy individual.
Instead, it's more of a, hey, there might be a storm coming, so perhaps we should think about finding some shelter. In his mind, that shelter lies in commodities, agriculture, and fallen hard assets. Imagine commodities and silver as your sturdy financial umbrella, shielding you from the downpour of inflation and market volatility. Imagine agriculture as your raincoat, protecting you from the chill of economic uncertainty while holding the potential for future growth. Rogers, who also has an uncanny knack for making economic predictions that could curdle milk, has once again turned his discerning eye toward the looming financial horizon. The infamous words still ring in our ears, his assertion that the Fed is one of the most dangerous things in the world. He warned that the United States was dangerously close to a currency crisis, a Cassandra crying out in a world that preferred not to listen. And now, like an episode of your favorite thriller series, Rogers has left us with a cliffhanger, insisting that the worst is yet to unfold. I don't know about you, but when a man who has amassed a fortune by understanding the invisible ebb and flow of global finance tells me to brace for impact, I tend to take it seriously. In Rogers' forecast, the brewing storm won't merely be an economic squall. He suggests that we'll see a real bear market rearing its furry head around 2024 or 2025. An economic storm that doesn't just steal your picnic basket, but devours your entire picnic spot. But what's the eye of this storm, you ask? A banking crisis. And not just any banking crisis, mind you. According to Rogers, this one could dwarf the 2008 global financial crisis. Just imagine that for a moment. If the 2008 crisis was an iceberg, what we're looking at here could be the entire Arctic.
Just to clarify slightly, what I have said is the next time we have a bear market, it's going to be the worst in my lifetime. 2008, we had a bad problem because of too much debt. Well, geez, look out the window. Since 2009, the debt has skyrocketed everywhere in the world. It's at staggering levels, which we have never seen in world history. So what I've said, the next time we have a bear market, it's going to be the worst in my lifetime because the debt is so much higher. Now, we may be entering the bear market now, and if not, probably soon. If there's peace in Ukraine, for instance, there would be a big rally. Oil will go down, grain will go down, and people will say, oh, everything is okay.
Jim Rogers is no fortune teller. He's a keen observer, an experienced player in the game of finance who has spent his life studying the ebbs and flows of economies. It's worth paying attention when he sees a potential storm on the horizon. So, as we move further into 2023, heed the advice of this seasoned investor. Keep a close eye on the financial landscape, invest wisely, and consider adding some commodities, agriculture, and silver to your financial wardrobe. After all, as the old saying goes, there's no such thing as bad weather, only unsuitable clothing. We know the finance world can feel like you've wandered into a lion's den while wearing a meat suit. However, if you're interested in taking the plunge into investing in assets and stocks, or even if you're an old pro looking for a better deal, check out the first link in our video description. It'll lead you to a platform where you can start trading commission-free. It's like getting your cake and eating it too, except the cake is money. Who doesn't like a money cake? Remember, investing isn't about following the herd. It's about being the intelligent wolf who knows when to pounce. So, heed Jim Rogers' advice. Think long-term, stay informed, and choose your investments wisely. After all, the best investment you can make is in your future. Stay smart, folks, and happy investing.